to start. So good morning. Welcome to the CII Corporate Governance Summit 15th edition. And this is the first plenary session with a broad theme on ESG. I am happy to introduce the panel of this important session. We will be joining in a couple of minutes by Mr. Amit Chandra, Chairman Bain Capital. He's got stuck in some government meeting, but he'll be joining soon. In addition, we have all the other panel members with us. We have Mr. Vineet Nair. Mr. Nair is the founder chairman of the Sampark Foundation and also the former vice chairman and CEO of HCL Technologies. Mr. Shashikiran Shetty, founder and chairman All Cargo Logistics, the leading integrated logistics services provider. Mr. Shetty is also the chairman of the Society and Board of Governors of the National Institute of Industrial Engineering, and is also a firm believer of conducting business with highest corporate governance standards. We also have Mr. Vishesh Srivastav, Managing Director, Investment India, Temasek. Mr. Srivastav has 15 years of investment experience and has led multiple investments in the healthcare, consumer and telecom, media and technology sectors, serving on many boards of reputed companies also. We also have Mr. P. Kanchinandan, Corporate Secretary and Chief Legal Officer, Tata Steel Limited. TK, as he is known, is also responsible for the compliance functions of Tata Steel and the legal requirements of the company in the areas of governance, antitrust, corporate actions, and new ventures. We also are joined by Mr. Sivanand Ramachandran, Director, Capital Markets Policy Initiatives, CF Institute. Mr. Ramachandran advocates policy positions on issues impacting Indian capital markets, including corporate governance, ESG, and pensions. Siva, as is mostly known, has 15 years experience in financial services. So, though we don't have Mr. Amit Chandra, the moderator of the session, joined in, but I would take the liberty in terms of requesting any of the panel members. Maybe we can start with Mr. Vineet Nair to have his initial comments, and then we can have a round of initial comments by each of the panel members, and then we can get into a panel discussion. So with these remarks, I welcome you all once again and would request Mr. Vineet Nair for his opening comments, please.
Good morning, everybody. And it's wonderful to be with you on a topic which is very, very important. You know, there is, I'm sure you are all aware of a hype cycle. Hype cycle is where a topic takes on a big hype in terms of verbose, vocabulary, and then it sees a significant drop in terms of actions before somebody kicks your backside in terms of the fact that it needs to be done. And then you start working on it and work your way upwards. I think ESG, sustainability are topics which everybody is talking about, but doing very little in the way it needs to be addressed. And therefore, these conversations are critical from the fact they contribute to the hype cycle, but at the same time, I'm going to throw some torchlight on the fact that very little is being done practically on the ground, and why that will come to bite us very, very quickly. If we go back historically and look at the quality movement, many years ago, a lot of us resisted the quality movement, predominantly because it added overheads to our manufacturing process. And it took a lot of time for us to get convinced that first time right is actually a cost-effective solution to the manufacturing problem. And only once we got convinced that first time right is the way, that is the time these standards around Dennings or standards around ISO or standards around CMM level 5 in IT became prominent standards which everybody ran to try and adopt. And once everybody tried to adopt to the standards, then it became a race to the standard. So, that became a minimum condition. You need to be an ISO certified organization or a CMM certified organization for you to be able to do business. And we have more and more standards. We have ISO 20000 on IT operations. So there are more and more standards coming in. So because of which the quality of product and quality of service and quality of response dramatically improved. When you look at the employee centricity of organizations, despite the fact that there is a humongous amount of literature written on it and management have written books, including my book on employee first, customer second, I don't think organizations have yet understood the seriousness of the role employees play and the responsibility which organizations have with reference to the employees. We don't have a standard or determining the health of the employees in an organization. You've recently seen in the news today, 600 more employees being laid off by one more unicorn, which is worth $2.3 billion. And there is no accountability to these kind of actions. So when it comes to employees, we don't have standards, we don't have accountability, and we have very poor response. When it comes to environmental concerns, once again, there is a lot of vocabulary being spread around. But if we really look at the amount of carbon footprint for Indian companies, it's dramatically increasing, predominantly because everybody is focused on revenues, on profitability, on margin expansion. There is no indicator of the carbon footprint. So there were lots of reports on how to measure carbon footprint and the fact that you need to declare the amount of carbon footprint and the fact that you need to print it on the package or print it on the service. A lot of vocabulary has been given to that for the last 10 years, but practically speaking on the ground, neither the consumer is making a difference between company one and company two based on carbon footprint, especially in India. Neither the companies are becoming sensitive to this issue. Now, in my mind, the one dramatic change which has happened post the COVID times is the fact that the consumer has become younger, consumer has become digital. There are lots of complaints on Twitter, on Facebook, on LinkedIn, which are being given huge amount of merit to. And therefore, all these issues of bad practices means vocabulary being very good. We are ESG compliant and we are this and we are that. But bad practices in practical terms on the ground is going to get a lot of airtime across the company. And once that happens, and the consumer wakes up of the fact that this is a good ESG compliant company and this is not a good ESG compliant company on all parameters in this open architecture of digital information, I think that not focusing on ESG will come to bite us. Now, the implementation of ESG, obviously we will discuss, during the panel conversation, but my personal belief is why we talk about environment, why we talk about sustainability, why we talk about all these things, why we talk about standardization. Do not forget that everything comes from responsible employees and you being responsible towards employees. If you don't do that, then the rest of the things will not fall in place. So thank you so much for this opportunity, and I look forward to this conversation.
Thank you, Mr. Nair, for your opening remarks. Very relevant, very pertinent. May I now request Mr. Shashikaran Shetty, if you may like to have some experience sharing in terms of your company, which is leading an example in terms of adhering to these practices, your experience in commitment to the ESG and journey to the sustainability, sir.
Yeah, thank you, Vikasji. It's a wonderful insight from Vinitji. Thank you very much for that. And I thank CII for inviting me for this session. And I would like to say that, in our organization, we believe in being in business need to be also with a purpose. It cannot be just about profitability. It just cannot be only about growth is a mantra, right? I think the building in sustainability, building in governance, and thinking about environment at all times is very deeply spoken in our organization. And I think all this will comprise a part of the vision and the value system that you wish to drive within the organization. And the entire ESG need to be part of the entire process is what we believe. Recently, we started to become far more agile in terms of ESG standards within the organization. To start with, we reconstituted our board or added a couple of more new members who are experts in ESG. One of them is Mr. Mahendra Chauhan, who joined our board, and he has been put as the chairman of the committee to bring in the ESG standards across the group in India and internationally. That is one part. And following that, the entire reporting standards, more standardized, it's always better. Otherwise, become very confusing, very taxing to study and understand, etc. Today, like Mr. Nair said, that this has to be a movement. People have to understand the need and understand the necessity of ESG. It is no longer something fancy or something to talk about just as a fashionable thing, right? This is very important. World is changing, particularly post-COVID. The digital technology disrupting a lot of businesses. So I think the companies to think about, what's in the future, how things are changing, and accordingly set standards I think is very, very, very important in our point of view. And that's what we are practicing in our organization and trying to bring awareness. I think the awareness and the measurement are the two very important tools in implementing anything. And ESG will not be an exception. It is something completely new for many people. I think that's the way we have to go about it. Thank you.
Thank you, Shetty, for your opening remarks. May I now request Vishesh Srivastava, being the investor, so your perspective in terms of when you look to the companies for making investment decisions, what are the key criteria which you look, and also the experience in terms of the Indian corporates complying to the ESG standards?
Thanks, Vikas. Good morning, everyone. Am I audible?
Yes.
Yes, please.
Awesome. Excellent. So I'm glad that we are discussing this important topic today. Let me just take a couple of minutes to talk about how we at Temasek, are committed to ESG. So at Temasek, I think sustainability is at the core of everything we do. We strive to deploy capital, whether financial, human, or social, to catalyze solutions for a better world. We aim for achieving positive social and environmental impact alongside sustainable financial returns. For us, doing well, doing right, and doing good are almost inseparable. As a company, we have delivered carbon neutrality since 2019, and we have maintained this status each year. Not only that, we are also committed to reducing the net carbon emissions attributable to our entire large portfolio to half the 2010 levels by 2030, and to achieve zero net carbon emissions by 2050. That's a challenge we have taken upon ourselves. So on the environment front, we adopt a three-pronged approach. One, obviously, we invest in climate-aligned opportunities. A couple of examples of this is that we have set up Odoo Power, which is a renewable energy platform in India. We have invested in Schneider Electric India, which provides energy and automation solutions that enhance efficiency and sustainability for all their customers, right? Second, we enable carbon negative solutions. In Singapore, we have partnered with banks and the stock exchange to establish Climate Impact X, which is a global exchange and marketplace for carbon credits. We believe that enabling the trading of carbon credits will incentivize companies to become much more serious about their sustainability agenda. And three, we encourage decarbonization in businesses. Last year, we partnered with BlackRock to set up decarbonization partners, which aims to provide capital to companies or technologies that are looking to decarbonize. We're also very happy to support our portfolio companies in India, for example, Zomato, as it looks to reduce plastics in its packaging, and it looks to move its entire rider fleet to electric vehicles within a relatively short time frame. So, divestment of carbon emitting businesses could easily allow us to lower our carbon portfolio very, very quickly. But we think that, that would just pay lip service to our motto of sustainability and would actually do nothing to reduce emissions. So we choose to lean in and we work with our companies. We support their transformation. We support climate abatement actions wherever it makes financial sense. One example of that is that, we own Singapore Airlines. We are large shareholders there, and we are helping them transition towards net zero emissions. We're partnering with them to upgrade their fleet, pilot the use of sustainable aviation fuel, and things like that. On the governance front, we hold boards and management teams responsible, and accountable for their activities. We expect them to abide by sound principles of governance and codes of conduct. We also engage actively with our portfolio companies. I've mentioned a few examples, as we support them to embark on their respective journeys of value creation. So let me just pause here, looking forward to having a robust discussion.
Thank you, Vishesh. Now we are joined by Mr. Amit Chandra, Chairman. In your absence, we took the liberty of starting the session, so we are only going with the introductory remarks. We have had Mr. Vineet Nair, Mr. Shashikaran Shetty, and Vishesh just started with their opening remarks. But now you may please take the lead and moderate the session, please.
Thank you so much. And first of all, my sincere apologies for dialing in late. I was speaking at a session in Bhopal, and the Honorable Governor and a senior minister were on the podium, and the session was running horribly late. On account of protocol, I could not leave. My apologies to all the panelists and also everyone who had dialed in. Thank you so much, first of all, for starting the session on time without me. I really appreciate the gesture. I'll just make a few points, and I know that I think there's one other speaker who needs to make opening comments other than me. I'm so glad that CII has organized this session. We're all going to make a few opening comments. I'm going to go next, and then we'll have one other panelist do the same. We're going to try to cover 4 important topics: sustainability, integration into business culture, both strategy and operations. I picked that up. We are covering that well. Need for common metrics, the establishment of materiality, sustainability, finance, and the role of investors. Reporting standards is becoming really, really important. And then, finally, we're going to actually have both a panel discussion and Q&A. I'd just like to make a few opening comments myself on this topic. I was trying to do that as a part of setting the stage, but let me do that now. Look, post World War II, much of the world was obsessed with figuring out what the right economic model was to drive both employment and wealth creation at scale. This resulted in lifting hundreds of millions of people out of poverty while creating trillions of dollars of wealth. Over the past decade, however, it has become evident that the path we have chosen is not really sustainable. It needs tweaking. The actions we have chosen to power the planet, to transport ourselves, to grow produce, the way we treat flora and fauna, have all put the future of the planet at risk, possibly tipping it during most of the lifetime, of all of us to a point of possibly even no return. At the same time, rising inequality is now being recognized as a serious threat to socio-political stability globally. Last year, top 10% worldwide owned 76% of all of wealth, relative to just 2% owned by the bottom 50%. The numbers in our country are not very different. It is therefore not surprising that governments and leaders across spectrum are becoming obsessed about correcting all of this. Philanthropy by wealth creators has traditionally been seen as a response to all of this. But I think we are also now very clear that philanthropy alone is not enough, and a lot more needs to be done. And that's where I think the ESG framework is the beginning of a common response across borders by corporates, investors, and regulators. The initial desire was to minimize the negative impact that everyone has unleashed on the planet and communities. But now we can see that leaders are emerging who are turning this into demonstrating how this can be a positive response. And we just heard how Temasek is viewing this. Accordingly, companies and investors are looking for ideas that don't just meet the bar, but can actually be good for the environment and communities in the long run. Look, as a person from the world of finance, I must also stress that it is a myth that doing the right thing and finance don't necessarily mix. Data now shows that ESG investing actually leads to stronger returns over time. For instance, during the pandemic, funds that applied, ESG frameworks actually outperformed. Now, why does this really happen? Let me make a few simple observations. And those who have studied ESG compliant companies know all of this. There are a few things that really drive better compliance. One is that ESG is clearly linked to top line growth. Increasingly, clients are looking for more sustainable products. It has been observed that ESG compliance combined with strong communication can enable businesses to build better customer franchises and, importantly, stronger government and community relationships. Second, ESG provides better returns on CapEx and makes you feel better about them. Investments in industrial enterprises in areas like scrubbing, renewables, waste reduction are all invaluable in the current environment. They're also socially responsible to the community, and they will undoubtedly avoid future liabilities that can be huge and, importantly, will drive customer preferences. Third, complying with ESG lowers your cost of capital, and it can differentially attract investors who are looking to invest in these areas. Fourth, ESG can result in actual cost reductions. While they might require investments in the short to medium term, there is now increasingly a clear case that it reduces longer term costs and can drive up margins. And fifth, ESG can actually uplift employee productivity. A critical reason why ESG is important is that it can help businesses retain high quality employees, boost employee morale by giving them a sense of purpose. And we know ultimately that, and Vineet, I know, has talked a lot about this in the past, that employee satisfaction ultimately drives shareholder returns. So if we all as customers, investors, call for better behavior from companies, policymakers and governments will also respond, and this will not become an exercise in futility. With that, let me hand over to, I think PK is the only one left to make opening comments.
Yeah, PK and Seva also, both.
And Seva as well. Excellent. Thank you so much.
Thank you. Good morning, all. Thank you, Amit, and thank you, CII, for this opportunity. I'm honored to place my views in this Corporate Governance Summit on this very important topic of ESG and corporate citizenship. I'm a student and practitioner of corporate law and corporate governance, so my perspectives will, of course, reflect my orientation. Globally, the governance landscape is changing and changing fast. And of course, India and corporate India is no exception to this trend. From ends justifies the means to long-term sustainable growth depends on ethical approach. From inform others on a need-to-know basis to transparency being order of the day. From domestic investors to global investors. From very closely held boards to very diverse, broad-based boards. And of course, from a compliance-driven reporting to a more holistic governance-based reporting. So these are changes that we are actually seeing that are happening currently. And these changes, in my perspective, is a result of a very fundamental shift in the way we understand the purpose of corporation. For decades now, we were used to understanding that the purpose of corporation is wealth maximization for shareholders. But I think there is now greater momentum and support for stakeholder capitalism. And I think this has reached critical masses. Most countries, and of course, most companies globally now recognize that there is a strategic need to have stakeholder-centric approach to the purpose of corporation, and that's more holistic and comprehensive. In fact, there is a research that's currently on at the Oxford University on the purpose of corporation. And I think the research clearly indicates that directors, managements, asset owners, and managers indeed owe accountability to the larger set of stakeholders and not just to the shareholders. And I think India as a geography and our own regulators have actually taken a leadership role in pushing the stakeholder capitalism to the fore. When we look at the provisions of the Companies Act and the SEBI listing regulations, these predominantly actually focus on stakeholders and not just the shareholders. India possibly is the only country globally to have codified few provisions to give flip to the stakeholder-centric approach. Aspects like the corporate social responsibility, which is mandatory in India, and you generally don't find such provisions elsewhere. Likewise, directors owing a duty to the stakeholders and even to the environment, which is codified. And of course, then the reporting, which is far more comprehensive and holistic and includes non-financial metrics in the form of business responsibility and sustainability reporting. I think some of these interventions actually kind of make India as a geography very unique. And these underlying shifts of the purpose of the corporation and the governance framework actually calls for some reflection and focus on the long-term strategy and value creation, engagement with stakeholders, and of course, being sensitive to the community around the corporate operations. To me, ESG is no more a compliance-driven mechanism, though in India, it is kind of codified in some form, but it's turning out to be far more strategic for the very sustenance and longevity of corporations. And I think ESG as parameters are going to be very, very critical as we move forward. I did note Mr. Nair's comment on the hype theory. Yes, I think there is a lot of talk, but I think the change, the underlying shift is slow, but it is happening. And I think most of us will be part of these changes and will be actually the change agent, and conferences like this actually only advance the objective of that change. Thank you for your attention, and thanks for the opportunity.
Thank you so much.
Yeah.
Would you like to go next?
Yeah, sure. Thanks, Amit, and thanks everyone. Thank you, CII, for the opportunity to talk about mostly the investor perspective. So I represent CFA Institute, which is a global association of investment professionals. So I mean, my hope is to kind of provide the investor perspective on some of these topics. So I'll probably start with one of our own surveys. So CFA Institute does a lot of surveys of our charter holders. And a recent one we did in September of 2021. So what we did was we asked our charter holders, global charter holder base, about a few questions about issues of materiality and what kind of integration they are doing, ESG integration they are doing, and their thoughts on other things related to ESG, right? So I think we got about 700 responses, but about 40% of the respondents are over 20 years experience in investment industry, right? So you're talking about really the decision makers when it comes to ESG. I think what they said, some of these, I just highlight couple of findings which might be interesting. So one is 80% believe that ESG must be integrated in investment analysis, but 20% said ESG integration is not necessary, right? So I think, obviously we have come a long way when it comes to global ESG investing, but there is still a significant minority left, which kind of is somewhat skeptical when it comes to ESG integration in investment analysis, portfolio construction, security analysis, and those kind of issues, right?
Good morning.
Second.
Yeah.
So secondly, I think we asked whether investors want government mandated ESG disclosures or they would prefer voluntary disclosures. Surprisingly, a wide majority, 3/4 of our respondents said government mandated disclosures is preferable to voluntary disclosures because they really want that kind of standardized disclosures for investment analysis and so on. And some sort of government mandate is possibly where you might get it, right? So I think that we thought, that was surprising for us. And the last thing we asked him was, what kind of material information do you need? There are two kinds of materiality. One is financial materiality, or how does environment and social issues impact the company's bottom line and performance. And then there is an impact materiality, which is how does companies' operations and services and business impact the environment and the society, right? So most of our respondents want reporting on both. Traditionally, investors have preferred the financial materiality. They just want to know how the share price is going to be impacted by ESG issues. But increasingly, they are recognizing the other side. So you don't need just the government regulation. Investor pressure is also moving companies towards disclosures on impact or their impact on environment, right? I'll probably talk a couple of things about role of investors, and we can kind of talk about it more through the discussion. So role of investors in sustainable finance, there are many dimensions to it, but I'll just highlight a couple. One is like, how does investors help world achieve a transition to the low carbon economy, right? So it's top of government's mind, top of like most people's mind. Historically, exclusions and divestments used to be the way to go. And you stay out of oil and gas, divest from coal, and you divest out of all these hard to abate sectors, so to speak. But that investment approach is changing. There are plenty of evidence. Global Sustainable Investment Alliance puts out what is the investments according to approaches. So it used to be exclusions and divestments, but it is now moving towards engagement and so on, right? So if you have to achieve net zero goals, then investors have to invest in dirty industries too, right? So it cannot be just investing in renewables and like getting away with it. The second thing, I think there is a lot of recent criticism about conflating ESG investing with popular opinion, so to speak, right? So I think the Ukraine war and there was a lot of issues around whether ESG investors should invest in defense companies. Earlier, they used to stay away from it. Recently, some funds are investing in it. Is nuclear exclusion acceptable? Like there is no, whether it's taxonomy, whether it's investment exclusions, there is no one view about it, right? So it all like seems to be some of the decisions are driven by popular opinion rather than like, real issues that impact like material issues and so on, right? I think these criticisms or quibbles notwithstanding, I think incorporating ESG does provide a full picture of a company's operations, and that is valuable for investors, right? And our role at CFA Institute is more of educating our analysts and professionals on how to incorporate ESG in investing analysis and security analysis, portfolio construction, and so on, right? Lastly, I'll just make one point about reporting standards. I think, some people have already spoken about the ISSB standard. And I think ISSB, and I've looked at ISSB, the disclosure drafts, I looked at BRSR and so on. To me, it sounds like ISSB is extremely complementary. So BRSR talks a lot about what should companies disclose, but ISSB provides that kind of principle-based, how should companies go about it, right? So there is a lot of complementarity, and we can explore some of these topics in the discussion. Thank you.
Thank you, Siva. I want to move to the next section of this, panel, and try to cover the four main themes that we talked about. Given we have four themes and we have about 25 minutes, we're going to try to spend about 6 minutes on each of those themes. And what I'd like to do is request, each, not all our panelists, but, maybe call upon 2 or 3 of our panelists to talk about each of those 4 themes and try to accomplish 2 things in them. One is each one of them has a wealth of experience because of everything that they are doing and have done in the past. So maybe talk about some examples on each of those themes, point number 1. And point number 2, given we have almost 500 people who have logged in to hear this, maybe give them practical suggestions like a toolkit on some of these points that they can carry away on some of these themes. So on the first theme is actually how can sustainability integration be achieved into business culture? How do you really shape strategy and operations? And maybe Vineet, you've had an incredible corporate career. not just at HCL, but you've also served in many boards. You've been an advisor to some really amazing private equity firms. If we could begin with you, if you have some powerful examples or just some really practical suggestions, we'd love to start with you on this.
Thanks, Amit, and good to see you after a long time. I think that there is one opening comment I like to make and then give some suggestions. First is that I don't think ESG should not get hijacked by environment. There are two other aspects to ESG, which is social and governance, and we should be very careful. On governance, I think we have made progress leaps and bounds because of the way the stock exchange and SEBI and all those regulations have come in, and there is better disclosures. But on the social side, and Amit knows this very well because he's extensively working like I'm working, it is a very poor track record of all corporate governance, all issues. Now, whether it is a compliance to 2% or what the 2% is doing, you just have to take the recent companies who were listed. And all the investors in this panel and all the people who are listening, did you consider the social track record of these companies before making investments and getting them to 10, 20, $30 billion, whether at the early stage or at the later stage? So what is their social track record? And the social track record starts with employees. As I was telling you, there is a Times of India article of 600 people being fired by one of these companies with valuation of $2.3 billion. I mean, is that a fair thing to do? Is that, and all the investors who are investing in that company, what are they doing? So before talking about, your commitment to ESG, I will request everybody, all investors, to talk about their commitment to social. And the commitment to social starts from your commitment to employees. That's point number one. The point number two is in terms of the social, India is such a poor country with so many people in pain, and Amit is working in villages. I'm working in about 1 lakh schools with 1 crore children for the last decade. And both of us know that the real India is in pain. And real India needs corporate India. Real India needs the intellectual power, not the 2%, but it needs the intellectual powers of trying to find innovative solutions to solve the problem. And that is your commitment to social, to look at things around your factory or to look at, issues which you really feel strongly about, and leveraging employees and leveraging innovation and leveraging technology and leveraging your capability to solve those problems. And that to me are very, very critical. Practical suggestions are very, very, very easy. Number one is that no change will start unless you really start caring for your employees. So I would like to see better commitment of organizations towards employees. I'm not talking about unionization. I'm talking about equal opportunities. I'm talking about surveys. I'm talking about employee satisfaction surveys being part of annual reports. I'm talking about declaring the salary difference between the CEO and the bottom of the pyramid employees. Declaring your attrition analysis without, making distinction between forced attrition versus, voluntary attrition. So let's knock all that nonsense off and get the declaration in the annual report around the employee matrix, predominantly because organizations have seen that if you truly take care of the employees, they create magic for you. And if you always are hanging a sword on your employees, which a lot of organizations are doing, especially the new startups, then you are built to sell. You're not built to last. And we need to push organizations to build to last. So that's practical suggestion number one. Suggestion number two is you must understand that, it's true with your sons and daughters. Everybody in that millennium age wants a purpose in life. And, one of the panel members used that word, purpose. What is the purpose? What is the purpose of your organization? While Amit and I may be working as part of our respective foundations, investing our money, but that we are not organizations. What is the purpose of your organization? And how is that aligned, and how do employees relate with that purpose and feel excited, predominantly because they're working for an organization which is trying to solve a deep-seated problem in the organization? So can you convert the purpose to be the mission of the organization and get everybody involved in it and solve that problem? The enthusiasm level will increase, and you may spend far more than 2%, but you will get a much higher return. So I'm just focusing, Amit, on the social aspect of it, because that is something which gets a lot of verbose, but not enough attention. And those are the two practical suggestions I would share.
Vineet, I'm so glad I started with you. I think you made terrific points. In fact, I'm out here in Bhopal, and last night when I checked in to a brand new Taj property out here, the moment you switch on the TV, the first thing that strikes you is Jamshedji Tata's purpose. It's actually what comes on, right on the first screen of the first screenshot of the television. You know, I could have actually asked PK to talk about what the Tatas do, but I think you've elaborated a lot of those points. I'm going to ask PK another point. PK Siva actually talked about you cannot avoid investing in dirty industries, quote unquote. And as a part of strategy and operations, it's very clear that as a world, we have to make certain investments, and that's a part of sustainability as well. Tata Steel, for example, has to basically make certain kind of investments. How do we as a nation, how do we as companies address this issue of sustainability by making certain investments which are not fashionable, but yet are critical? It would be great to get your perspective on that.
Thank you. Yes, I think this is certainly the central or core issue of how do you get people to be enthusiastic, how do you get people to invest, and how do you get the executive management to take a long-term view. I think the interventions have to be holistic. It cannot be the interventions cannot be from one player. It cannot be either from the management or the board or the regulator. All the stakeholders in the governance framework and in the society need to kind of know that some of the interventions that would need to build a better future are all long-term. So 2-3 things needs to happen. One, our alignment in terms of purpose, in terms of our compensation, in terms of our disclosures have to all be a bit long-term. People cannot, even investors cannot be expecting quarter-on-quarter results while expecting companies to be sustainable. I think those two may not be aligned. Likewise, executive compensation or even compensation for employees at some stage need to be aligned to the purpose of the corporation, to building a better future. And I do agree with Mr. Nair. I think taking care of employees, taking care of the societal people would go a long way. There needs to be a trust that needs to be built that people will not be hired and fired in a span of minutes. I think there needs to be trust in employees that the organization will stand by them when they are in trouble. And so would organization need to have trust in employees that employees would indeed stand up for the purpose that the organization kind of articulates. So I think one is clearly all of the stakeholders need to come together. Second is people must understand that some of these interventions cannot be short-term. The compensation structures, the incentives need to be aligned, and there needs to be some patience in the ecosystem because while there might be, companies may be having money to invest, but there's not enough technology that will take you to become greener tomorrow morning. It's not that you spend $1 billion today and you kind of reduce your carbon emission tomorrow morning. It doesn't work that way. So I think people, all of the stakeholders have to take a little bit of a longer view. And I think institutions like Tata's, certainly if I've been there for more than a century, is a testament to the fact that long-term view does pay off.
Thanks, PK. So if I may turn to you, you referred to this in your opening comments as well when you spoke about metrics. And obviously the big thing that's happened in recent times is the BSBR framework. it would be great to get your perspective on, do you think this framework is going to really work? Do people understand it fully? You know, so both, I mean, it'll be good to know kind of, are we, and do you think it's going to be a check the box? Is it actually, do you think it's going to drive what Vineet said, purpose?
Right. So I guess, we speak to a lot of investors, both in India and this thing. We spoke about BRSR and asked them so I think some of the commentary seems to be that, there seems to be a lot of metrics to disclose, right? So it's going to impose a cost. But then when I speak to investors, they say that, look, there are metrics, but then are these disclosures helping us? So one issue is definitional, right? So currently so for example, let's say, companies report how much percentage of energy comes from renewable resources, right? So some companies report it purely for electricity, and other companies report including other fuel sources like natural gas and stuff, right? So from their factories and so on, right? Now, what earlier, it was not clear what the statement X% from renewable, X% energy from renewable meant, without actually knowing what the definitions are. And BRSR clarifies it. There is a breakout which says that, from electricity, from other fuel sources, in total, etc., right? So I guess the clarifying the definition certainly helps. But then even if you clarify definition, there are interpretational issues which still analysts grapple with, which obviously BRSR cannot solve for. One example is like the sexual harassment metric, right? So some companies report 0 complaints per 100,000 employees year after year. Other companies report a very high metric per 100,000. So that's the usual definition, right? But the point is, will you say that company A is better than company B, or company B has a more open culture of reporting that allows employees to report it in the first place, right? So that interpretational issue when it comes to statistic cannot be sorted through BRSR. It can only happen by taking a holistic view of a company, its culture, and potentially investor engagement, right? All these things have to come in picture, without which I think BRSR will be just, it's a good starting point. I think it certainly helps. I'm an optimist, right? So I think so it's not, I don't believe it's just a box ticking exercise, but I just think it's just a part of the picture.
So, Amit, can I come in for a minute?
Yes, please do come in. My next question was, in any case, directed to you, but you should come in.
Okay, sure. Thank you very much for that. I think, when I gather all the thoughts from the earlier speakers, there are two things very clearly emerging. In governance standards, India has leapfrogged quite a bit. But where we need to leapfrog really is on environment and social impact. What Amit said, the real India is in pain, right? And unless the corporations, like you also said, need to really get their act together to see how we can come into helping the real India, right? And I think end of the day, what is the reason the governance standards went high? Because of certain issues that emerged in the last 20 years, which brought in a lot of new acts and new governance standards, reporting standards, etc., right from the board level, etc., right? So I think we must realize one thing very clearly: why environment and social impact are necessary. Because otherwise, the world itself is not sustainable. Forget about the business, right? So it has to be thought right from the top that this is no more a fashion, or this is no more a kind of a requirement. It is absolutely essential for the existential need of the human beings and the planet. I think the whole theme need to start from there, and every big work gets done starting a first step forward, right? So I think what I'm trying to tell you is that there need to be, and also the survey said 75% of the people say there has to be proper the regulatory acts need to come in place, or reporting need to be mandatory, etc. So look at that as a way in which in the organizations we see what gets measured gets done, right? And what is mandated generally gets done, right? Otherwise there are penalties, otherwise there are other issues that centers around that. So in my point of view, I think in every business, if you look at it, there are opportunities for us to reduce carbon footprint. For example, a transportation industry, which causes almost 7% of the global pollution, there are opportunities where the electric vehicles are around the corner. So some of these things have to be made mandatory so that there's a level playing field. The second factor is one of the other most important business in India is the MSMEs. How do you, investors are there to invest in large companies and public companies. What about the millions of MSMEs? How do you bring about that awareness among them? So their need of funding is from the banks. So how the investors are demanding, even the banks need to demand the standards of ESG from the MSMEs to the best extent possible. Sometimes these things, what you need to do, you need to do. That's the way I, maybe a little radical, but I think that's the way we have to go forward looking at the larger issues in hand.
Yeah. Thanks, Shashi. Shashi, in fact, when you came in, I was actually going to pose a question to you, and I wanted you to kind of bring it alive for the audience. You've been an exceptional first generation entrepreneur. As you've kind of evolved in your own journey, how do you see this entire evolution of ESG, that whole conversation, make you change the way you make investments? Because of, you've taken a lot of investments from investors, private equity investors, you've dealt with FIIs and domestic investors. You've of course dealt with banks as well. So if you could bring alive to us, like clear things that you've needed to do differently in the last 2 years relative to, let's say, 10 years ago.
Sure. I think when you were not there, my opening remarks said about two things. One is about the whole purpose of why the business is in the first place, right? That need to be part of the entire vision and values of the company, and that is communicated across the organization, starting from the board, right? You've got to have those members of the board in the company who are also passionate and committed to the ESG standards, and we made some certain changes in the board to that effect to begin with. And that's when you talk about in the last 2 years what we have done. In the last 2 years, we have been exceptionally busy in many things. So we started really an engagement within the company on ESG in a formal way, effective this financial year. We brought in certain eminent people in the board who are well aware of the entire governance standards and governance, sustainability, and environment. That is one. And I think the end of the day, the most important thing is that it needs to be connected to your heart. I think you'll have to win hearts. When you win hearts, it becomes a movement. And for me, for some reason, I was always connected to governance quite well. I was always connected to the environmental issues well from the beginning. So voluntarily, the company had gone on a journey to plant 1 million trees, and we crossed well over 650,000 trees. And that too, we have planted those trees at the backyard of some of the poorest of the people in the smaller towns, which are fruit-bearing trees, which then also gives them a kind of an income. Right, so we created that initiative. We brought in our employees to be volunteers in the social engagement of the company in our corporate social responsibility. We always spent much more than what the mandated amount is. So and that you talk about that a lot within the company. So the people feel in the organization as a heart, right? So there's a deeper employer brand that gets built. And people remain connected to the organization. Like earlier, a gentleman said that happy employees create greater shareholder value, right? And the GPW surveys, a great place to work surveys, we've been doing since many years. And what is the outcome of that is very vigorously followed up for implementation. These are some of the top things that come to my mind, which we have been able to do in the last several years.
Excellent. Thanks, Shashi. Vishesh, if I could turn to you, Temasek in many ways sets the trend for investing, because you not just, directly invest, but you indirectly are such a large investor in many investors, right? And so when you look at this, again, from a practical perspective, what's kind of the framework? Is it a minimum bar which results in go, no go? is there after that, hey, if someone's actually meeting a higher bar, you lower your cost of capital. I mean, help people around the, this virtual table think about this whole, how does this really work out? Does it really lower cost of capital? Do they just need to cross a minimum hurdle? It'd be great to get your, get your views. And, do you all actually use external consultants? Is this just kind of an internal team that does this analysis?
Thanks, Amit. Thanks. So I've been enjoying the discussion so far, right? Let me just talk about how we try within Temasek to adhere to some of these principles, right? And maybe I'll also take the opportunity to respond to a couple of points that were made before. Right. So beginning with, how we consider, ESG as part of our investment decisions. So we've embedded ESG into our, into our investment framework, right? Every single investment we make needs to have a very clear, assessment of, where the portfolio company stands today in terms of their ESG footprint, and that includes climate, that includes social, that includes governance. And we need to have a very clear plan on, what's the intervention that needs to be made, if at all, and how are we going to make that intervention, right? We measure the carbon footprint of our portfolio, very, very rigorously. In fact, we have introduced an internal price of overall carbon dioxide emissions in our entire portfolio, and we've set it at $42 per ton of emissions to inform our investment decisions. Right, in fact, our long-term compensation for all our employees is aligned to the achievement of our carbon targets. We've also established a dedicated ESG center of excellence, and the purpose of that center of excellence is to disseminate research, data, best practices across our entire portfolio, right? So I think these are some of the ways that that we have adopted as we think about how we incorporate ESG into our culture. Now maybe if I can just shift gears, and with your permission, right? We also think of ESG as an investment opportunity that will uplift returns over the long run, and this results in a focus on some structural trends that we are investing behind. So, the rise of sustainable living is one of our, 4 key trends. It means that more and more consumers are becoming eco-conscious. As Shashi mentioned, this is, if you win hearts, you kind of, make a movement. And we think that, our portfolio companies should be, the leaders in that sense. And that will increase demand for their products and services, and this will be aligned with doing good for the environment, right? I also want to respond to what Vineet said, right? The second trend we invest behind is digitization. Technology is obviously playing a key role, improving lives and livelihoods, right? So while things are not perfect, we do think that, a lot of the companies that we invest in are actually creating new jobs, creating new opportunities, increasing the access that that supply, is it, if it's a driver or a delivery person or even a teacher, we are increasing their incomes, we are giving them more access, and this is a very, very strong theme that we invest behind, right? And I think the third thing we do is on innovation. So we look for very deep tech, very frontier opportunities, where we invest behind, clean transport, materials that capture carbon or trap emissions in some way, plant-based protein, and so on, right? So I think these are some of the ways in which, we try to, live by what we preach.
Excellent. Thanks, Vishesh. We have about 10, 11 minutes to go, and we want to take maybe 2 or 3 audience questions. But I just wanted maybe Siva and Vishesh, you to pipe in with just a minute of comments. If you look at the BRSR framework, and both of you have have a good perch point to kind of compare it to international standards. Do you believe India is ahead of the curve, behind the curve, in line with the curve? If we, just comply. Just quick perspective from both of you. Seva, you want to go first?
Sure. I think so BRSR is, I would say, ahead of the curve when it comes to most jurisdictions, right? So I think one issue with BRSR is, it is not, it doesn't incorporate materiality of businesses, industries to some extent. I think I know that there have been some discussions about can we kind of incorporate what is material risk for individual industries, the kind of the work that SASP has done globally. I think there has been some conversations, I know that, thinking about how to improve BRSR. But all said and done, I think the metrics that is covered is pretty global. The point about ISSB that I mentioned earlier is ISSB's draft, which is general disclosure requirement, it's complementary. Let me just give one example and I will leave it at that. So one is you talked about metrics, right? ISSB's draft says that you need to provide clear definitions and you should also provide uncertainties in estimating those metrics when you kind of disclose those metrics, right? So I think so BRSR asks you to disclose certain things. ISSB provides that principle-based guidance on what kind of considerations you should do when you disclose those metrics. So I guess there is that degree of complementarity which is quite useful, if you put everything together.
Vishesh, quick response from you.
Yeah, so look, I mean, I think, 2 points, right? I think one, the BRSR framework is definitely a step in the right direction. It starts with the top 1,000 listed companies, and I think that, that over time, as ISSB talks about it, it's not just listed companies that will need to have these disclosures, but, all companies will need to have these disclosures, right? And so I think this is a great first step. I also think that this is not going to be the second point I want to make is it's not going to be this is done and we will achieve standardization of reporting on ESG, right? I think just the accounting standards themselves have taken a very long time to harmonize. And it's going to be an iterative process. I think the BRSR framework will harmonize, will converge with global standards. For example, the guidelines set out by the task force on climate related disclosures or ISSB. And so I think we just have to keep pushing, right? We have to keep pushing and keep working towards the right objectives.
So I'm going to open up with the audience questions, and maybe I'll direct this to Vineet because he did make the point, and I think I completely agree with him on the point. Real India is in pain is heartbreaking to hear with respect to third-party resilience. How can one ensure that they, I would say we actually take all value chain partners in supply chain in their ESG journey? How can corporates be encouraged to follow this path?
I think, so I'll repeat what I said, that I think the environmental issues are being reported and there is a lot of work being done in that area. On the social side, we do not have any standards of reporting other than the CSR spend, which we are doing. So therefore, what I have been proposing and propagating is let's start with the employees. We heard a few things of the investments being made. So let's talk about the people who made investments in the new gen companies which came up. And to look at the social contract between those employees and the corporations, right? Were they permanent contracts? Were they temporary contracts? Were they covered by insurance? Were they not covered by insurance? What is the long-term contract to this? Can you be hired and then fired within 2 months of your being hiring? So what are those contract clauses between the employee and the employer? And this is being debated in the US extensively, thanks to Uber, thanks to Amazon. And this, unfortunately, is not being debated equally strongly in India. So I would say that let's start from there. Then when you do, and the person who's asking this question is very interesting, that as corporates, when you start buying, and this is how total quality came in, when you start buying and when you go down your value chain and when you force it on, and Maruti did a great job, when you force it on your vendors, who are your suppliers to comply to certain standards. So I would say that if you force them to comply to certain standards on employees, contracting, and those contractors, and if we go down that, I think the onus of responsibility will come in. I mean, my view is that if we focus on bringing about an ESG change based on reporting, then you rightly said, one of the panel member rightly said that accounting standard has taken decades for it to come. But that's the reason I'm saying go to IT vendors and go to CII, CMMI level 5 implementation or standards in manufacturing. That was demand-based, and overnight, within 5 years, you had 100 CMMI level 5 facilities in India, predominantly because it was demand-based. So if we can raise the decibel level on demanding more social responsibility, environmental responsibility and social responsibility, if we raise that decibel and we raise it very specifically around employees, because social is very difficult to measure and saying I'm spending 100 crores, 200 crores, you don't know whether you're spending on brand or you're really doing a material change. But if we can specifically raise the decimal on the way that employees are treated and the way your vendors treat their employees, then the same momentum as standards in IT industry got created will get created, demand will get created, and then everybody will run to try and be ESG compliant. But if we come from standards, I think the compliance, everybody will try and hoodwink the compliance as they have done with governance for many, many years.
Yeah, that's a great response. Thanks, Vineet. I really like the next question. And anyone who would like to address it, please join in. Maybe Shashi, you've been an entrepreneur. If you'd like to pipe in, how can startups and SMEs balance sustainability and ESG versus costs? And what does the expected cost curve for ESG compliance look like at different stages of maturity?
Like I said, Amit, we're just about launching a very structured approach to the entire ESG within our group. That is something that we're going to start. So I do not have anything specific data or experience in a formal way to start, except that fundamentally we know very clearly that it need to be done as soon as possible, in a most structured way possible, with a lot of right kind of reporting standards being followed, and employee participation, key managers, KPIs need to be connected to the impact that the organization wish to achieve and make them stakeholders and partners in the whole program. And not just for the sake of attracting investors. I think, like I said, this need to be serving a larger purpose, in my point of view, is how currently I'm thinking about it. And getting the board engaged is also very important, and form those committees to oversee this and meet regularly, including the management members in the committee, at least one or two at the most, right? So who can then take all the initiatives forward for implementation.
Yeah.
So
thanks.
If I may add,
yeah. Sure, Vishesh. Sure.
So I think this question is interesting because I don't think there is a balance to be achieved between sustainability and financial returns, right? I think they go hand in hand, right? And let me make it real, right? Let me give you an example. So this is a portfolio company of ours, which runs dark stores, right? And to improve the lives of their employees, who work long hours, hard hours in those dark stores, they decided to add air conditioning to each of those dark stores, right? And the air conditioners were run by renewable energy, so we were not we were neutral on the environment bit. But we thought this would be a cost, right? But turns out that the attrition among that cohort of employees dropped dramatically, right? And it reduced training costs, it reduced recruiting costs. Productivity in each of those dark stores went up materially, right? And this is measurable, it is very real, right? So what we figured is that it was not a cost, it was actually a benefit, right? And there are, there are so many examples I can give. So I don't think that, it is A or B. It is A and B, and both are actually, it's win-win. So, this was my small perspective.
Thanks, Vishesh.
Yeah, if I can come in with just
yes,
1 second.
Yeah, please do.
I thought of something. I'm sorry to interject, but like for example, we recently had the fortune of acquiring one of the domestic express company, which has been in existence for a number of years. And as we got into the company, we identified one of the big issue is about employee hygiene. The locations where the goods are brought in, the condition in which the whole distribution center was, the infrastructure wise, and the kind of facilities that existed in the premises itself is extremely demotivating for the employees, right? So one of the first decisions we took is to build 10 distribution centers around the country, which are of highest global standard. And obviously then, followed up with the entire connectivity and the program for managing that hub in a more systematic way, bring in the global standards, which not only makes the company more efficient, it also brings a lot of other impact, not even to the employees, even about the transit, the handling of the goods, and the multiple multiple handling of the cargo, multiple movement of the cargo, and attracting a right kind of associates, vendor who get connected to you. The whole ecosystem gets completely different. And always we try to aim to the international standards to get employee and stakeholder satisfaction.
Excellent. Thank you so much, Shashi. I think with that, we are just a couple of minutes over time. I do want to thank all my fellow panelists for their insights. I've at least taken away some very concrete points from this panel discussion. I do want to thank everyone who is logged in as well. And I want to thank CII for setting this up today. Wish all of you have a great afternoon, and thank you again for logging in.
Thank you.
Everybody.
Thank you all. Thank you.